Something big is brewing for Tesla. Canaccord Genuity just increased their Tesla stock price target for the second time. Now it's almost $300. If Tesla stock gets another round of price target increases, I wouldn't be surprised if Tesla stock soared more. For example, when Morgan Stanley upgraded Tesla stock, the shares soared 10% in one day. Things like that happen more than once. And while so many firms did increase their Tesla stock price targets, Morgan Stanley didn't. They are just maintaining the $310 price target for Tesla, keeping it as a top pick. So if this continues, people like Fred Lambert, who just sold their Tesla stock before earnings, they will deeply regret that decision. Elon actually commented on this. Could have happened to a nicer guy. He wrote that article on September 5th, so I assume he probably exited his position on September 4th, somewhere around $220. At best, he exited at $230. I also wouldn't be surprised to see a Tesla stock price increase from Dan Ives. His current Tesla stock price target is at $300. He's really sold on autonomous vehicles and AI by Tesla. He says it is going to be an AI story over the coming years. Elon just actually commented on the big Tesla stock price jump. Yeah, it was a good week. The stock market is wild. I think Warren Buffett has a lot of good sayings. One is having a publicly traded company is like having someone stand outside your house and yell house prices all day, and it's still the same house. Tesla has a nice house, and I like owning a piece of it. Bank of America is also saying that Tesla is charging up for the next wave of growth. I've been doing this for over 25 years, says Bank of America representative, and I've never seen a company like Tesla before. Elon Musk has done something truly amazing. Autonomy is far more important than people are realizing. Tesla is entering its next growth wave. Indeed, something huge, enormous is brewing for Tesla. And here's the highest rated Wall Street analyst that also analyzes Tesla, Colin Rush, and he just dropped a bombshell which has been obvious to me, but not so to many others. Tesla doesn't need a low-end vehicle to continue to grow. He still says only hold Tesla, don't buy more, don't sell, but at least that soundbite does sound more bullish than normal coming from him. And look at this. This further supports the possibility that something big is brewing for Tesla. Deutsche Bank sees Tesla launching robotaxi services next year. They actually believe it. Now, they think that the operation will be on a small scale, but they're basically now saying that Tesla's deployment of robotaxis without safety drivers is becoming the base case. This is pretty significant. They also believe that Tesla's first market will be Texas because regulation hurdles are not as big there, then California, and then Arizona and Florida. And they do expect that FSD version 13 is going to be 5 to 6 times better over the current 12.5 and 1000x improvement relative to earlier iterations from January. The analysts believe FSD could surpass human performance by mid-2025, marking a key milestone in Tesla's path to achieving ultra-low-cost transportation. If they really believe that, I would expect them to soon massively increase their Tesla stock price target, which currently sits at $295. If they really believe that very strongly, I would not be surprised if one day they say, you know what, really our Tesla stock price target is more like at $500, $600, but we are institutional and we need to appear reserved and not crazy, so let's play it safe, $295, but we're gonna keep increasing the Tesla stock price target. Anytime it jumps a little bit, we're gonna just increase, which is actually really smart for them to do because that puts them in a news cycle, and then more people see the institution, and then more people want to work with the institution. It's a marketing strategy for some of them. But what they don't realize is, if they said Tesla stock is going to, let's say, $600 next year, for sure, because they believe that Tesla really will launch FSD without safety drivers and that really it will be safer than human driving, if they did that, and then they turn out to be right, they would have so much more business they couldn't handle it. So I actually don't think it's a smart strategy for them to pursue, where they only slightly increase the price target. Even Gary Black just raised his Tesla stock price target now to $300 per share. It was $270 before. Wall Street overall also continues to boost Tesla's 2025 earnings and price target, reflecting higher gross margins and higher than expected deliveries next year. But the average Wall Street price target remains at just $227. If they keep raising it, it's going to go above where Tesla stock is right now. And Gary Black makes a prediction here: the $42 share discount between Tesla price and Tesla price target is approaching the largest discount since June 2023, suggesting further price target increases as analysts update their earnings and valuation models. I am really not going to be surprised if multiple analysts increase their targets again for the second time, just like we saw with Canaccord Genuity. And here's a full breakdown from Gary Black showing you why he has the Tesla stock price target the way he does. Pause if you like. Gary believes that Tesla will deliver 8.1 million vehicles in 2030. Wall Street only believes that Tesla will deliver 4.9 million vehicles. But that will turn out to be very wrong. Tony Sacconaghi, however, he did not increase his Tesla stock price target. Overall, he's a pretty decent analyst. But when it comes to Tesla, he is more of a contraindicator. I would be slightly worried for a second if he became bullish. He says Tesla stock is going down all the way to $120. And he believes that Tesla's impressive third quarter margin results were influenced by non-recurring factors such as deferred revenue recognition and favorable commodity contract renewals. Oh, you mean like lithium, Mr. Sacconaghi? Is that right? Lithium is coming back down to where it was in 2020. I don't see it shooting back up again. The Chinese really tried to keep the price higher, actually, and for a moment they were successful. I reported on these attempts. It actually worked for a little bit, and then it just came crashing down again. This force is just too strong even for the Chinese to manipulate. And then he also talks about the energy credits, but then you also need to think about the regulatory credits, which were down quarter over quarter. So it's a bit difficult to really buy his argument. Oh, here they did better, even though they actually had fewer regulatory credits here. So I'm gonna punish them for having fewer regulatory credits over there by saying, oh, you got more here. Doesn't he know that a lot of these big automakers, they don't want to transition to EVs, and they are almost actively trying not to do it because it's just easier to buy regulatory credits from Tesla? So these regulatory credit sales will continue for a while. Anyway, he says, taking that into account, the margins would have been at 15.6%, still above the consensus, by the way, of 14.9%. So even if you go with that number, is it really bad? No, it's still impressive. Oh, and look, I was right. He actually is referring to lithium specifically. The report points out that Tesla's lower lithium costs per car were due to the timing of contract renewals, which may not continue to improve in the fourth quarter. Unless the market catches another big cold like in 2020, I don't see how the price of lithium could skyrocket again a lot. Maybe a little bit, okay, but not 5x. Like, when you say things like that, I really start to think, are you actually even trying to be right, or are you just trying to reiterate and double down on your previous positions just to support your inaccurate thesis? Tesla has indicated that it expects its automotive gross margins, excluding deferred revenue and credits, to decrease sequentially. Bernstein's analysis literally, they say, raises concerns about the company's future growth prospects. Yeah, and I would like to raise my concerns about Tony Sacconaghi's Tesla stock returns. Even though Tesla stock skyrocketed during the time he was covering, he still somehow managed to average minus 18% return per rating. Oh, but yeah, Tony Sacconaghi is definitely nowhere near as bad as this guy, Craig Irvin. There's nothing that Tesla has that Toyota doesn't. You know, I have a theory about this whole thing, actually. You know how Tesla and Toyota, they both start with the letter T? Maybe he thinks that Tesla is like a subsidiary of Toyota or something, that it's the same company. Oh, Greg, I feel sorry for you. As well as for people that invest based on his recommendations because they get below average market returns. It's difficult to believe that he really has a Tesla stock price target of $85, but he doesn't say sell, so maybe he's not as silly as he appears to be. He says hold. And for a brief period of time back in 2019, he actually said buy Tesla stock only to say sell that same year. Oh, Craig, it's difficult to find someone who has a worse Tesla stock average return per rating minus 78%, even though he was right 55% of the time. This is why you don't want to trade. You can be right more often than wrong and still lose money if you trade Tesla stock. Consider to be warned. I'm too smart to think that I could actually make more money trading Tesla instead of just buying regularly and holding for the long term. And Kevin O'Leary, he says what Elon Musk has achieved is unprecedented. Sort of like it is totally unprecedented for a Tesla bear to make any money in the long term. They just lose everything. Interestingly though, Congresswoman bought some Tesla stock on Monday before earnings. Did she know something about Tesla's earnings, or was this just luck? If you are a trader, you might want to consider looking at her a bit closer, maybe copying her moves. And here's something that's really surprising to hear with the election around the corner, coming from a left-leaning politician. Wow, Bernie Sanders says Elon Musk is a brilliant guy. He does say, though, that he's no great fan of Elon Musk, especially in the role that he's playing right now. But is he a brilliant guy? Of course he is. Does he work like a dog? Of course he does. Does he come up with these incredible innovations in companies? Yes, he does. Does he deserve credit for that? Yeah, he does. So will you look at that, a left-leaning politician actually praising Elon Musk? That definitely is not good for his party, and yet he still does it. I can respect that. Elon responded to it. This may sound crazy, but I am coming around to liking Bernie Sanders. Our views as to how to best serve humanity are different, but he seems authentic in his desire to do so. Neuralink will ultimately help tens of millions of people with serious brain or spine issues. My priority for new technology development is focusing on minimizing existential risk for civilization as a whole, without which nothing else matters. There are very impressive drugs under development that will save millions of people. Regulatory overhaul by the Department of Government Efficiency, DOGE, will accelerate the process of bringing them to market. Elon also agrees that the nomination from Bernie Sanders was taken away from him in 2016. There's also something that happened here which is important to observe for us Tesla stock investors. Dylan summarized this whole thing perfectly. In the middle of 2023, Elon endorsed Trump's border wall idea. In late 2023, Binance began declaring the death of Tesla as Elon was alienating millions of target demo EV buyers. In early 2024, FUD reaches all-time high that Tesla sales are doomed thanks to Elon's politics. And in late 2024, Elon starts winning over those on the right rather than just upsetting some on the left by campaigning and giving speech after speech, answering people's questions, dedicating incredible amounts of his time, and advocating for common sense. And now a maxed out Madison Square Garden in a Democratic stronghold of New York City is chanting Elon's name. They are. And it wasn't just for like 1 second. It goes on for a while.
You guys are awesome. Honestly, this is like...
Wow. Looking at the long term, not in the short term, but looking at the long term, I agree with Dylan. I think it's safe to say that any sales Tesla may have lost will most certainly be balanced out by new supporters of Elon and eventually of Tesla. The future is going to be awesome. And here's one anecdote, a real world example of this. I've been thinking that too. I'm a conservative Republican who bought a Tesla out of curiosity and love it. All my friends post burning EV memes on Facebook. Now they're asking legitimate questions about Teslas. New market is unlocked. You can upset someone really fast, but it takes a little while to gain their trust, to really have them come into your world. You can break a relationship in a second, but if you're a young guy and you're looking for a girl to marry, you don't just walk up to the girl and say, "Will you marry me?" No, it takes a while, but you can break up immediately. And we are seeing here people really warming up to Elon from the other side. And while many people look at Tesla's core customers right now and they say, oh, they are on the left, not that many people on the right. The way Elon, I think, thinks about that is, oh, hey, look, these people are buying EVs and these people, they don't know how good EVs are, so let me educate them. And most people on the left will buy Teslas anyway because it's the best car for most people. Even Mark Cuban, who is backing the other side very strongly, He says that he has 2 EVs, and one of them is a Tesla. Oh, and look at Meet Kevin. He says that Q3 earnings were a game changer. I said that too, by the way. He agrees with me. Tesla impressed everyone, he says. So is he gonna become super bullish now? He even put must watch in his video title here. He doesn't often do that. That's pretty rare. Now, Meet Kevin's PP fund, pricing power fund, is actually doing pretty well since inception. The analyzed return is 21.75%. But he got really lucky with the launch date of his fund, because if you look at S&P 500 during that same time, it returned 43% total. Looking at his portfolio right now, he doesn't have Tesla in the top 7 holdings, but that's likely to change if he's not clickbaiting with that title. Oh, Tesla is doing something here. Tesla is optimizing details you've never even thought of. This will reduce cost, complexity, and improve automation. Okay, what's going on here? Tesla has announced a new standardization to reduce the cost and complexity of electronics in the automotive industry. And is inviting all device suppliers and vehicle manufacturers to join them in this initiative. Today, EVs typically use over 200 connections. To simplify this, Tesla has simplified the connectors in its cars so that they are just 6 different connectors. Well, this is great for Tesla, but also good for other automakers. Only Tesla can lead an initiative like this. I mean, they already did it with the 48-volt architecture, and now they're leading the industry in this way too. Of course, this also helps to standardize the 48-volt system. I just love the Tesla team. They're so capable. Look, even Fred Lambert is not betting against Tesla in this case. He's pointing out the charging adapter that all Teslas use and how that's now becoming a standard. But he thinks it's likely to be harder. Tesla had the supercharger network as a carrot for NACS. There's no equivalent for this, except that a lot of these companies are already using NACS, so why don't they just follow along? Here are a few observations from James and Omar. Megapack revenue recognition remains a bit of a mystery. Powerwall revenue, unlike anything else Tesla sells, probably leads installations, as Tesla sells to some third parties that carry inventory. Megapack revenue, in contrast, lags installations since revenue is recognized at specific milestones in each project over time. Since Tesla did 150,000 installations between February and October 2024, it means sales were probably over 150,000 those months. And then James does some math, and he says that Tesla reported 6.9 gigawatt hours of installed capacity in Q3. In other words, 85% of installed energy still came from Megapack, not Powerwalls. And this is really important to know. While Powerwall gross margin is probably higher than the profit margin of the Megapacks, a favorable quarter-over-quarter Powerwall Megapack mix, it still can't possibly move the needle from 24.5% to 30.5% in Q3. So the increase in profitability must be coming from Megapacks, which is actually really good because you can really scale Megapacks. It's a bit harder to do that with Powerwalls. I want James to say here is actually widely bullish for Tesla. What he suspects is happening with Tesla's energy business is this. Number 1, Tesla signs a contract with company X. Number 2, Tesla accounts for the sale, price and cost of the transaction at the time of commitment, and those revenues and costs are deferred over project milestones. Assuming Megapack margins were 20% when this contract was signed, that is what will be deferred and recognized over time. 3 months later, Tesla signs a contract with company Y, but this time margin has now increased to 30%. Repeat same process from above. Now when revenue is recognized, it will be at the higher gross margin, which is probably what explains the jump from 24.5% to 30.5%. Meaning this should not be a short-term one-time phenomenon, but should extend over multiple quarters and probably even accelerate as more profitable projects make up a bigger proportion of the Megapack revenue mix. One reason why the margins went up so much is probably because Tesla switched to LFP batteries, and the battery prices in China have collapsed, so there's no reason to expect a slowdown here, predicts James. Like I said earlier, something big is truly brewing for Tesla. But you know what's even more impressive than all of this, Megapack 2 XL prices are now cheaper than at any point in history and have fallen about 50% from their all-time high in 2023. Despite this, Tesla's margins are increasing. Do you remember that time when Elon Musk said there's basically infinite demand for Megapacks, and then not too long after that, Tesla cut Megapack prices and there was a backlash? Ooh, well, probably why they did that is because their costs were so much lower and their margins were still so good that they were able to do it while still making more money. Whoa, people love Cybertruck so much. Specifically, Shaquille O'Neal loves it so much that he actually bought his third Cybertruck now. Wow. Well, this is definitely good. Whoa, Volkswagen has announced plans to shut down at least 3 factories in Germany, laying off tens of thousands of staff and shrinking its remaining plants in Europe's biggest economy. Well, this is really bad for them. I guess something big is brewing for them too, but not in a good way. Tesla's Fremont factory just reached an important milestone. They just produced its 1 millionth Model Y. If you have been following the Tesla story for many years, you will remember the tent and the stunt. It played a big role at bankrupting many Tesla short sellers. In Canada, we actually just reduced our interest rates by 0.5%, which is actually really bullish for Tesla. And in the US, I also expect interest rate cuts to continue. And since Tesla sells vast majority of their cars with a special financing rate now, and they pay for the financing cost up front by reducing their recognized revenue per car, every central bank rate cut, just like that one in Canada, it will help for Tesla in Canada specifically, is essentially a Tesla price increase as far as margin is concerned. Canada is not a huge market for Tesla, but it is one of the more important markets. But of course, compared to the US, it's relatively tiny. And Tesla actually just further extended a 5-year 0% interest loan incentive in China to November 30th. I expect that promotion and promotions like that to be renewed over and over again. Maybe when the refresh Model Y comes out, maybe they will take it away, but for Tesla's existing vehicles, first, I think they will just keep extending it. This post actually makes sense. The affordable models will not be stripped down Model 3s and Ys. Stripped down models don't take 12 months of factory retooling and other prep, which is what Tesla is taking. Most people forget that the engineering effort for the $25,000 compact car was fully complete, so why would Tesla not use it to make new affordable models cheaper? They will be brand new models with design choices driven by affordability, probably a hatchback and a smaller SUV. But also remember that Tesla says new models will be made on existing lines, so they can't be radically different either, but it will be probably different enough. Model S and X are made on the same line, for example, and they are noticeably different vehicles, of course. He really likes the idea of that small SUV. Now, I wouldn't say that the effort for the $25,000 car, that the engineering effort was fully complete, but yeah, Tesla definitely did make a lot of progress on the vehicle before. Oh, and one of the most important people from Tesla, Lars, just talked about the Semi. Absolutely, Tesla Semi is coming in mass shortly, and we made it so compelling, anyone who does not use it will be left behind. Tesla's goal, make products people love, or in this case, heavy goods transportation companies. And check this out, the Tesla Semi charging infrastructure costs can undercut competition by 50%, says senior company executive. Tesla can deploy fast charging for a semi truck at about $500 per kilowatt, given its experience in developing and deploying charging infrastructure. This is coming directly from Dan Priestley. This is, of course, really good news. Now, for those that think that the Cybertruck does not have a crumple zone, well, check this out. This suggests otherwise. This is good news. See that emergency vehicle? The car is on FSD and it avoided an emergency vehicle. It went on the side of the road. That's good. Maybe not perfect because I wanted to move to the side sooner and completely stop, but definitely progress has been made here. Tesla's VP from China says Tesla Energy is its new growth axis. Just wait until the Megapack factory in China is built. Make sure to like and subscribe if you haven't yet, and I will see you in the next video, probably on Wednesday. Thank you so much for watching.